There's so many complicated pieces to take into account when it comes to the 401k puzzle. From RMDs to getting the full employer match benefits to catch-up contributions, it can feel like a lot of ground to cover. How can you navigate this confusing landscape? There's one rule that may help grow your savings.
Well, 401k is a great invention. It was put into place years ago, enabling you to save for your own retirement. See, what happened was companies used to fund your retirement. It was called a pension. You'd work there, maybe a company for 30 or 40 years, you retire, they would continue to pay you a salary, i.e. a pension. Well, 401k now shifts the burden of having that salary in retirement to you. So you really need to put money in your 401k as much as possible, as much as affordable. And if your company has a match, you should definitely put in up to what the match level is, because it's free money you're getting from the company. So the 401k, a great way to save money. You can save it on your own in a bank account. You can save it on your own other places, mutual funds or stocks, but you have to systematically do it. In other words, every paycheck, your money comes out, some of the money comes out and goes in your 401k. That's the secret ingredient. Consistency gives you confidence all the way through retirement.
As Coach mentioned, it is rare to find a job that still offers a pension, making the 401k one of the most popular retirement savings vehicles in America. It also offers some incredible benefits everyone should try to take advantage of.
Some of the common advantages of 401k is it helps you on tax time, because every single dollar you put into the 401k is deducted from your taxable income at the end of the year. So when you get your W-2 at the end of the year, let's say you're making a salary of $50,000, but you put in $6,000 in your 401k over the year, your W-2 will now say $44,000. So you don't have to pay tax on that money. Now that's a good thing. The bad thing is, you haven't paid tax now, so when you take the money out in the future, you will pay tax. And you also pay tax on the growth. So there's a give and take there. It's a great way to save taxes now. If you're in a situation where you really need to save taxes, why not save in your 401k? Because you're saving for your retirement, and you're also saving taxes.
It's important to partner with a planner who understands the ins and outs of retirement planning. They can help you navigate some common misunderstandings surrounding the 401ks, like this one.
So some of the misunderstandings about the match is maybe the match is tax-free. So you put this company gives a match and you assume that's free money, but it's not free all the way. The government's going to tax you on whatever the match is too when you take the money out. Again, it is tax deferred. When people say tax-free, that means you never pay tax. Tax deferred means you're delaying paying tax down the road. Now this can be a good thing or a bad thing. If the value of the 401k continues to go up, which you want to have happen, your tax bill is going to be more when you take the money out. Whereas if your 401k is in bad investments and it goes down in value, well, you're going to have less tax because you have less money. So to me, I'd rather pay more tax because that means I have more money. One of the other big misunderstandings about the match is that that's immediately your money. Your company has, if they're giving you a match, they have a vesting schedule. That means you put in a certain number of years or months with the company and a certain percentage of the money they gave you in the match becomes available to you. So it's usually not immediate. It's usually what we see maybe 5-year vesting schedules. That means 5 years later, the money they put in with the match is going to be available to you. But again, you don't want to touch it anyway because you're building for retirement. It is all going to be taxable when you take it out, and it will be available to you if you put in a certain amount of time in that vesting schedule.
A 401k can be an incredible tool for building up savings for retirement. Get the most out of this strategy by using the benefits offered through your 401k provider. Coach Pete and the team at Capital Financial can help you navigate the financial world to get you where you want to be in retirement. Take advantage of the no-cost, no-obligation financial review to understand the ins and outs of your retirement plan. Contact us today. Also, be sure to like the video and subscribe to the channel for more retirement help.